Good day everyone and welcome to our forum discussion on platform banking and ecosystem strategies. Today we will discuss how digital transformation is changing the banking industry, especially in Malaysia. Platform banking refers to a digital model where banks connect customers, fintech companies, e-wallet and third-party providers within one ecosystem using technology such as APIs. In today's digital era, customers expect banking services that are fast, seamless, and convenient. Because of this, banks are no longer competing only with traditional financial institutions, but also with fintech firms and super app companies like Grab Holding and Ant Group. However, while platform banking creates many opportunities, it also introduces risks such as cybersecurity threats, regulatory challenges, and increased competition. To begin our discussion, I would like to invite our Digital Transformation Manager, Belle, to explain why banks must urgently adopt platform banking strategies.
Thank you, Aline. From a digital transformation perspective, the banking industry is experiencing major disruption. Malaysia's digital economy is growing rapidly and consumers are now heavily dependent on smartphone and online platforms. Today, customers want financial services that are integrated directly into their daily activities, such as online shopping, food delivery, transportation, and e-wallet payment. So the biggest challenge for traditional banks is that super app ecosystems that is already dominate customer engagement. For example, Grab Holdings integrate transport, food delivery, digital payments, and banking services through GX Bank. Meanwhile, Shopee controls a large portion of the buy now, pay later market through SPayLater. These companies own valuable customer transaction data and are able to provide highly personalized financial products. Traditional banks cannot rely on conventional banking anymore because customers are spending more time inside digital ecosystem rather than visiting physical branches. In addition, regional integration is creating new opportunities. For instance, Touch and Go Digital has expanded cross-border QR payment system with countries such as Singapore and Indonesia. Customers can now make real-time payment overseas with transparent exchange rate and lower transaction costs. This shows that banking is no longer just about financial products. It is about being part of an ecosystem that connects multiple services together. However, digital ecosystem also creates new risks. Therefore, I would like to invite our Risk Compliance Manager, Claire, to explain the key operational and regulatory risks involved in platform banking.
While platform banking improves innovation and customer convenience, it also increases operational and compliance risk. One major concern is cybersecurity risk. Since platform banking depends heavily on API and data sharing system, banks become more exposed to cyber attacks, hacking, identity theft, and data breaches. For example, platforms like Grab Holding, Shopee, and Touch and Go process millions of customer transactions daily. If there is a weak security within the ecosystem, customer data will be stolen or manipulated. This could damage customer trust and result in a huge financial losses. Another issue is regulatory compliance. Banks must comply with regulations set by Bank Negara Malaysia regarding anti-money laundering, customer data protection, and digital banking governance. The challenge is that platform banking involves multiple third-party partners. Banks must ensure that every participant in the ecosystem follow the same compliance standard. There is also management risk. Many traditional banks still rely on outdated legacy systems that are difficult to integrate with modern digital platforms. If management fails to adapt quickly to technological changes, banks may lose customer and market competitiveness. To manage this risk, banks should strengthen cybersecurity system, conduct regular compliance audit, and improve employee digital skills training. Now, I would like to invite Sharia, our financial performance manager, to discuss how platform banking affects banks financially.
Thank you, Clay. From a financial perspective, platform banking creates both opportunities and risks. One major advantage is revenue diversification. Traditionally, banks mainly depended on interest income from loans. However, through ecosystem strategies, banks can now generate additional fee-based income from digital payments, merchant partnership, insurance commissions, and wealth management services. For example, companies like Grab Holding and Shopee have successfully integrated digital financial services into their platforms. Customers can easily access payment system, financing, and digital wallet within one application. This increases transaction volume and customer engagement, which can improve long-term profitability for banks. However, there are also financial risks. First, cybersecurity incidents can result in major financial losses. Banks may need to spend large amount on compensation, legal settlement, and cybersecurity improvements if customer data is compromised. Second, digital lending and buy now pay later may increase household debt exposure. Younger consumers can access financing very easily through digital platforms, but excessive borrowing could increase default rates and non-performing loans, also known as NPLs. If customers fail to repay their debts, bank profitability and financial stability may weaken. Therefore, banks must balance innovation with proper risk management to ensure sustainable growth. Next, I would like to invite our Operation and Alliances Manager, Eva, to discuss the strategic recommendation for banks moving forward.
Thank you, Sharia. To remain competitive in a digital ecosystem, banks must adopt strong strategic action. The first recommendation is to strengthen strategic partnership and ecosystem alliances. Banks should collaborate with fintech companies, e-commerce platform, and digital wallet providers to expand their service beyond traditional banking. Through partnership, banks can innovate faster and reach more customers without spending excessive costs on developing technology internally. The second recommendation is to improve cybersecurity and operational resilience. Banks should invest in stronger cybersecurity systems such as AI fraud detection, multi-factor authentication, encryption technology, and continuous monitoring system. Employee cybersecurity training is also important because human error remains one of the biggest causes of data breach. The third recommendation is to accelerate digital transformation. Banks should modernize outdated legacy systems by adopting cloud computing, open APIs, and data analytics. A dedicated innovation team should also be established to focus on digital product development and ecosystem expansion. Lastly, banks must strengthen governance and regulatory compliance. Strong governance frameworks help banks reduce operational failure, legal risks, and reputational damage while maintaining customer trust. In conclusion, platform banking offers significant opportunity for innovation and growth, but success depends on how effectively banks manage risk and adapt to digital transformation.
All our panel members for an insightful discussion. From today's forum, we can conclude that platform banking is transforming the financial industry by creating more connected, digital, and customer-focused ecosystem. However, banks also face major challenges such as cybersecurity threats, regulatory compliance, operational risk, and intense competition from fintech companies and super app platforms. Therefore, traditional banks must adapt by strengthening partnership, improving digital infrastructure, investing in cybersecurity, and embracing innovation to remain competitive in the future. Thank you everyone for listening, and we hope this forum has provided a better understanding of platform banking and ecosystem strategy. Have a great day.